If 2021 was the year of the meme trader, is 2022 the year of the sports gambler? 30 states and the District of Columbia have now legalized sports betting, meaning that tens of millions of people are now able to gamble on games from the comfort of their couch. That influx of new gamblers has made densely populated states such as New York the largest market for gambling, even surpassing Las Vegas, Nevada. And that number is going to grow. 3 states, Florida, Ohio, and Kansas, have legalized sports gambling but haven't launched it yet, while 11 states have introduced bills to permit betting. As more states allow sports betting, with many allowing online betting, comparisons are being drawn between last year's meme trading craze, in which novice traders, emboldened by social media, pandemic stimulus dollars, and free trading apps like Robinhood, were able to cause the prices of heavily shorted stocks such as GameStop and AMC Entertainment to surge, much to the detriment of hedge funds that were betting that the stock prices would fall.
It never seems to win.
With a less buoyant stock market, much of that meme frenzy has dissipated. In late January, Robinhood said that its monthly active users fell by more than 8% from the prior year. Given the increase in sports betting, one can assume that some of that trading action was turned into betting action. In my experience in both the meme stock world last year and now with sports betting, I have to say I see strong similarities between the two. Both meme traders and gamblers are engaging in speculation in situations where outcomes are expected but uncertain.
You got a bet, mister. Coming out. The big miss, boxcar.
A trader may look at a company's fundamentals and determine it to be a good investment, but sudden geopolitical events outside of the company's control could destroy that thesis. Similarly, a seasoned sports gambler could look at a player and a team's stats before a game, only to have an unexpected injury ruin their planning. With much of that activity moving online, particularly on phones, the similarities between meme trading and sports betting are even greater. Registering and funding a brokerage account as well as an online betting account can be done in just a few steps, and the power to make or lose money is just a few taps away. But there's something else going on. I normally disable my phone notifications, but for the sake of reporting, I kept my Robinhood and DraftKings alerts on. The notifications on both are constant when I'm gaining money, when I'm losing money, and when there's opportunities to do more. Last year, when I was reporting on meme stocks, I spoke with Adam Alter, professor of marketing at New York University's Stern School of Business. Here's what he had to say about push notifications on trading platforms.
Notifications coax you to return to the platform. They're triggers that remind you that the platform still exists. Without these notifications, we might focus our attention elsewhere. I think they hurt investors. There's very little evidence that attending to your portfolio's short-term fluctuations helps you either feel better or trade more effectively across the long run.
I wondered how this could be tied to sports betting. While I did get a lot of notifications on Robinhood, I don't recall notifications that urged me to make specific trades. Meanwhile, on DraftKings, I'm inundated with emails and alerts about the different kinds of bets I can make and how I can boost my returns. What I found even more surprising was the complexity involved in sports betting. If you followed my previous series on meme trading, you know how nervous I was to place my first options trade. I'll admit that was a little bit nerve-wracking for me, so I might have to take a walk around the block. But over the last few weeks of navigating DraftKings, I had to learn a completely new vocabulary on spreads, parlays, and prop bets. For the sake of experimentation, I'm going to walk you through the experience of placing a complex bet on DraftKings. We'll see if I understand what I'm betting on and what the outcome is. And as a reminder, any profits will be going to the Dow Jones News Fund. So for this game, I made my first complex bet. I was doing a same game parlay. What this meant was I wasn't just betting on one outcome for the game, and I wasn't just placing several separate bets on the same game. I was tying 3 bets together. So one, I said, the Mets are going to win this game. In the first inning, there aren't going to be any home runs for either team. And the first team to score a run is going to be the Mets. Now, each of these bets has their own odds. The odds of the Mets winning, the odds of there being no runs in the first innings, all that sort of stuff. But when you put them all together, the odds of that bet going in your favor become more difficult. And when you do a parlay bet, you place the bet and you don't get credit for 1 out of 2 or 2 out of 3. All 3 have to go your way or you lose money. So yes, the opportunity for reward gets, exponentially higher. The wager amount, you just risk forfeiting it if it doesn't go your way. So this was pretty complicated. Again, I don't think it was super risky. I watch enough baseball to kind of know that these were safer bets, but still, you can understand all three things had to go my way. So what happened? I won. I put $1.50 down on these three bets. I'm a high roller, I know. And my payout at the end of it was $6.30. So that is probably the best return I've had on any of my wagers to this point. And also, if you go back to my last series, definitely better than any return I had on any of my investing. So this does make me nervous, where I turned a little bit of money into a lot more money. And I'm kind of excited to do this again, which I don't know if that's a good thing. But stick with me and see what other bets I place.